Equity futures a touch lower this morning after yesterday's rally. 30 minutes ago until the official start of trading. I'm Katie Greifeld.
And I'm Sonali Basak. Matt Miller is off today, and Bloomberg Open Interest starts right now.
Coming up, Delta posting upbeat results and also restoring its outlook as demand starts bouncing back. You also have chip stocks continuing their rally after NVIDIA becomes the first U.S. company, really the first company ever, with a $4 trillion market cap. And President Trump issuing another fresh batch of tariff demands, including a 50% rate on Brazil. All of that and more coming up, Sonali. But what does it look like under the hood?
A little bit more on trade for you here. Looking at Freeport-McMoRan as one of our movers this morning. Mining stocks are getting a boost after President Trump said the new 50% tariffs on copper imports would take effect on August 1st. The stock has risen by more than 20% this year, Katie.
And we have to talk about Delta again because Delta absolutely surging after restoring its profit guidance as consumers begin traveling again. Those results really providing a boost across the entire sector. As you can see, Delta just the first one out of the gate. And you had CEO Ed Bastian calling the current environment, quote, incredibly stable, adding that people are starting to understand with clarity where things are headed. And that allows them to start making plans whether to travel or to invest in a business. For more now, we're joined by Bloomberg's Benedict Campbell, who leads our global space and aviation coverage. And Benny, it really feels like it's the fact that they restored that profit guidance that they pulled just 3 months ago that is really sending shares ripping this morning.
Yeah, really strong showing on the shares there, and really sort of shows you that travel is all about confidence, and that confidence has been restored. If you remember, just a couple of months ago in April, the company was really in dire straits. If you compare to the start of the year, strong launch into the year, and then in April it all sort of fell apart because people weren't booking anymore. You had the tariff fears. You also had some high-profile accidents in the industry, so generally a lot of restraint across the travel industry. And that forced Delta to basically renege on its targets for the year. Those are now back, albeit a little bit lower, but they have reinstated an outlook for the year, and investors are taking that very positively. The stock is surging 13% this morning. United, American, a lot of other airlines also moving up in the slipstream of Delta. We're going to get United earnings next week, so the question will be, can they also replicate this kind of an upbeat picture? But as you said from Ed Bastian, the tone is people are traveling again. The long haul is back. The transatlantic market is strong, particularly on the corporate side. A little bit of softness maybe on the more price-sensitive side, but on the corporate side, things are looking strong. So that's really what gives them some confidence for the back half of the year.
Bloomberg's Benedict Campbell, we thank you so very much for keeping an eye on it. Of course, it's going to be a long earnings season, but a bright start. We're going to continue the conversation now with Tom Fitzgerald. He's TD Cowen Airlines analyst. He has a buy rating and a $55 price target on shares of Delta. And given the reaction this morning, it has been very bright. I do want to ask about the to-be shores. You do still have economy class seats, both internationally and domestically, more sluggish than you're seeing some of the bright spots, international luxury. How much do you worry about people traveling when they're not traveling at the higher ends?
I think it's a bigger concern for leisure or more value discount-oriented airlines than an airline like a Delta or a United that have a more diverse array of revenue streams that can kind of buffet them in periods of volatility, especially in more price-sensitive leisure in the main cabin. So, you know, we found the print today pretty reassuring for full-service carriers that have access to those diverse revenue streams.
Well, let's talk about the economy class trips that seem to be faltering both when it comes to U.S. travel and when it comes to travel abroad. We know that carriers have been cutting fares to help fill their planes. It doesn't seem like that's necessarily working in Delta's case. Of course, they're fine when it comes to loyalty travel, when it comes to premium travel, but what other levers do they have to pull when it comes to the middle of the plane, to the back of the plane?
I think it's challenging. I think it can be a process that takes time. It's not something that can resolve itself over 1 or 2 quarters. I think you need to see more, main cabin seats just come out of the market and to try to rebalance back in line with demand. I think just given with corporate travel, there are some positives in the print today, but overall for the industry, it's still less than where it was in 2019. And I think because of that, we just have a redundancy of capacity in more leisure lanes. And I think with the Deltas of the world able to kind of be all things to all people, that creates problems, or that leaves surplus capacity from the likes of the ultra low cost carriers.
When you look at the new target itself, on one hand, of course, a lot of confidence in the fact that Delta can make a new target, but the midpoint of the range is getting you to a place that's lower than what they had back in January. What are the greater risks to the forecast from here through the end of the year?
We'll probably have to see some, if there is, if trade tensions ratcheted up again, or there was some type of nefarious macro event, or a part of the economy was weakening and that caused corporate demand to pull back, and we saw premium demand pull back. I think that would, people would be concerned about the whole sector. That's not our expectation. And I think, Delta CEO made a lot of great points today in the media, just talking about with more certainty from the tax bill, trade tensions kind of coming down. A lot of that should be additive for travel demand as we look out into 2026. So even though, it is below where they guided to in January, but it is above where consensus had settled by a meaningful amount. And so I think it will kind of give investors confidence, at least in the full service carriers, that they can emerge better than feared from this type of environment.
Yeah, definitely turns some heads to hear Ed Bastian describe the economy as stable. Of course, he does have a very unique and wide-ranging perspective on that. But I want to talk about the fact that Delta is the first of the major carriers to report earnings this season. What does this portend for some of their peers when it comes to maybe reinstating guidance and just their numbers overall?
Yeah, it's probably the most positive as a read-through for United Airlines, given that they're the most similar business to Delta. American and Alaska also have, a lot of exposure to premium. American also another global full-service carrier. Alaska's developing that business out. I think for the the leisure and the ultra low-cost carriers, the main takeaway in the read-through is, the main cabin revenue was down 5% year on year in the second quarter, because that's more representative of their core business, and they don't have all the other adjacent revenue streams or the crown jewel loyalty programs to offset that weakness. So I think it's really positive and encouraging for the other full service carriers. I think it's going to set a high bar that's going to be tough to beat for the industry laggards.
A high bar indeed. Delta shares currently up about 12% pre-market. Tom, great to get some time with you. That is Tom Fitzgerald of TD Cowen. Let's turn back to President Trump's tariff campaign. The president threatening a 50% tariff rate on Brazil, citing the treatment of former President Bolsonaro. Brazil's current leader responded saying he will not be tutored by anyone. Former Vice President Mike Pence joined Bloomberg Television earlier this morning to talk about Trump's tariffs.
I actually believe that President Trump is driving toward a long-term change in industrial policy in America, where he sees permanent unilateral trade tariff barriers as beneficial to America in the long term. And as a free market conservative, it's something I just don't embrace.
Joining us now is Bloomberg Washington correspondent Tyler Kendall. And Tyler, let's talk about Brazil a little bit. This definitely turned a lot of heads and caught a lot of attention because we're not talking about trade policy necessarily. Of course, the U.S. is using tariffs sort of as a forcing action here, but this seems to be entering a different realm.
Right, exactly, Katie. And it's worth pointing out that the U.S. actually ran a $5.5 billion trade surplus with Brazil last year. So this doesn't really align with the administration's argument when it comes to IEPA, the International Emergency Economic Powers Act, which was invoked to impose the so-called reciprocal tariffs on the basis that persistent trade imbalances amount to a national emergency. Instead, President Trump here is linking this tariff hike to a demand that Brazil abandon its ongoing trial of former Brazilian President Bolsonaro, as well as allegations that the country has actually censored U.S. social media companies. Now, you had mentioned part of the current Brazilian president's response to this in a lengthy post last night. He defended his government's actions when it comes to digital platforms and also said that Brazil is willing to invoke its reciprocity law for any sort of unilateral tariff that the U.S. does impose going forward here, because we were looking at a huge hike from 10% baseline up to 50%. And some important context is that the U.S. is actually Brazil's second trading partner only beyond China. And analysts tell us that if a 50% tariff went into place, that really could make trade unfeasible between these two countries. Now, of course, Sonali and Katie, we were expecting perhaps some sort of uptick in that tariff rate for Brazil, since President Trump had been doubling down in recent days that members of the BRICS coalition would receive an additional 10% tariff over policies that the president has claimed are anti-American after those groups of nations met in a summit over the weekend and criticized the tariff plans.
Tyler, we thank you so much for always keeping an eye on all of it for us. That is Tyler Kendall for Bloomberg. Now, some more movers on our radar this morning. A lot happening under the hood. Lockheed Martin cut to hold at TD Cowen on fewer F-35 orders. Really interesting stock this year, Katie, because you have seen the shares quite sluggish this year.
Absolutely. We know that a lot of investors have been really hot on defense. You think about defense, you think about Lockheed Martin, but again, that comes in the heels of that Bloomberg News reporting last month that the Pentagon had really slashed in half its request for those F-35s, and it seems like that's being noticed by the sell-side community. CoreWeave also being noticed,
Very
downgraded
interesting.
to hold at Needham on valuation concerns. I guess when you rally a gazillion percent from your IPO, that's to be expected.
Right, the IPO was at $40 now, still trading over 150. Another one people have been watching closely after an IPO on valuation is Circle, but it's up today more than 2.6% at pre-market. They are working with Ant Group to adopt its USDC stablecoin on its platform. This is what people are talking about, aren't they? That companies and countries internationally outside of the U.S. would turn to stablecoin more and therefore, according to the Treasury Secretary, at least hopefully drive more demand for treasuries via stablecoin.
Yeah, certainly. It's becoming a more in discussed topic, and you can't really ignore it when you take a look at Circle shares. So we'll continue to follow that story. We'll also continue to follow the AI craze, which shows no signs of stopping as TSMC sales soar and NVIDIA hits a $4 trillion milestone. And later this hour, New York City Mayor Eric Adams joins Bloomberg as the mayoral race takes shape. All that coming up. This is Open Interest.
And now to high interest, a look at what's making headlines around the world. The packaged food giant ConAgra gave a disappointing profit outlook thanks to rising costs from U.S. tariffs. The company said it will raise prices for canned goods to offset the impact of steel and aluminum tariffs. Meanwhile, Meta poached a former Apple AI engineer with a pay package of over $200 million. The social media platform is making unusually high compensation offers to its new members of its superintelligence team as the AI talent wars heat up. And TSMC's revenue rose a better than anticipated 39% in the June quarter. The results raise expectations for a sustained boom in AI spending. The CEO says AI chip demand will outstrip supply.
Well, let's talk a little bit more about TSMC and that profit surprise with Bloomberg Intelligence Global Head of Technology Research, Mandeep Singh. Mandeep, great to have you with us. And TSMC, it's a big, important company, and we care about the results in isolation, but we also care about the results because this is the world's largest contract chip maker. It's very important when you think about NVIDIA, when you think about Apple as well.
Yeah, look, I mean, the month-over-month results weren't that encouraging given, their overall revenue grew 40% in the first half. Obviously, we will have the earnings call next week, so they report the monthly results before. But look, 40% is really impressive given all that growth has been driven by AI. Now, what we'll be looking out for is how is the smartphone ramp up going to be in the second half? Because that's the holiday quarter they prep for in 3Q. And that is what drives their revenue in 3Q. And that's where right now you don't see any other pockets doing well outside of AI. Typically, you see that, other pockets like autos or smartphones will pick up. We haven't seen that. In fact, with the tariff situation, maybe there was a pull forward of smartphone ramp up in the first half.
So many of the fates of these companies are inextricably linked, and you have NVIDIA crossing that $4 trillion mark. Is there some read-through you could make between what happened with TSMC and what you might also see from NVIDIA?
I mean, AI is almost like low teens of TSMC's revenue right now, and they are expecting it to cross 20% over the next 2 years. So that tells you how that shift for ASMC fab is really moving towards what NVIDIA is selling, which is, the AI chips. So clearly, the demand remains strong for AI chips, and they are going to beat their numbers. The numbers will get revised upwards. But at the end of the day, it's about the rate of growth. Mm-hmm. And that is what I think the second half guide for TSMC is going to tell us, because right now, they've guided for 25% growth for the full year. When you grow 40% in first half, that implies a second half deceleration. So it'll be interesting to see if they raise their guide, and I think there will be some read-through for NVIDIA as well in that.
Yeah, and of course, we're talking about tech, but we're really talking about AI here. So let's talk a little bit about X, unveiling Grok 4. We know there were some issues with the previous version. And it was interesting. There was also a story that I believe that the plan here for Elon Musk is to integrate its chatbot into Teslas as well.
I mean, look, there is clearly a use case to be made for voice AI inside the Tesla car. But I still think it's too early, given we have seen, Grok as a large language model does hallucinate. In fact, this week there were some instances of the hallucination. So I think, again, it's too early to say they'll be able to roll it out successfully across their cars. But there is a clear use case for voice assistance that's coming when it comes to LLMs.
I was going to say, not to sound too silly, doesn't it sound not safe to be thinking about your chatbot in your car? I guess voice assistance, sure, you can make a case for that. But
I do want to switch gears while we have you as well, because a lot of eyes on Tesla, but also a lot of eyes on Meta, handing out $200 million pay packages. I mean, how sustainable is this talent war in the industry? And are these talents really in such short demand?
I mean, that is clearly the case. The latter part, it is, probably 100 or 200 researchers that has driven all this kind of new innovation when it comes to large language models. And I think the risk here is OpenAI may actually have to slow down its product launches, given it has lost some of their best researchers. So that is the risk. If GPT-5 or some of their new models actually cannot be shipped because they lost somebody really integral to the team, I don't think it's going to change Meta's fortunes in a big way over the next 6 months, maybe. And then when you bring in all the smart people together, it's hard to coordinate. I would be interested in seeing if the Scale AI CEO, Alexander Wang, is really calling the shots in terms of controlling how Meta is going to evolve its large language model, a 28-year-old really driving the vision.
One day we're going to have Mandeep here to do a map of all of the people, because to your point
like
here,
a family tree of who's creating AI in this country.
Right, because of course what we didn't mention too is people going into Meta at a high level for AI, but old school talent, Linda Yaccarino leaving X as they merge more into AI. Mandeep, we got to leave it there. Thank you so very much. That is Mandeep Singh of Bloomberg Intelligence. Don't miss his research as well on the Bloomberg terminal. A lot going on. And coming up next, we're going to talk about deals. The company behind my favorite snack, Nutella, is buying cereal maker Kellogg. Details on that next. This is Bloomberg Open Interest.
Welcome back to Open Interest. It's time now for our top calls. Some of the analyst action in focus this morning. And first up, Oracle getting raised to a buy over at Piper Sandler. The analyst cites rising demand from clients, shares up slightly. Next up, we have AMD getting upgraded over at HSBC. The firm is actually doubling its price target, citing significant upside to AI revenue estimates. Shareholders like that, shares up about 3.6%. And finally, McDonald's is getting raised to a buy over at Goldman. The firm says that it's beginning to see early signs that McDonald's new menu offerings and value promotions are working. Shares up about 1.4%, up close to 18% or so over the past year, Sonali.
And now we're going to take a look at some of the stocks that are moving this morning with a deals focus. You know I love a good M&A story. We're going to bring in Bloomberg Equities reporter Alex Semenova joining us at the desk. Starting with Kellogg, you know, we like talking about deals. We also like talking about food, frankly. I want to show you a chart here really quick, Alex, because our producer, Dan Curtis, made a really great point that overnight actually shares hit above 27 per share, $27 per share overnight. The bid had come in at about $23. The stock is obviously still soaring, but it just shows you M&A, merger arbitrage, has been such a hot trade, but you know, ultimately investors are still gaining.
Yeah, deal making is clearly back in full force. This morning is a testament of that. And of course, WK Kellogg, the cereal maker, it is being acquired by Ferrero International. This is the company behind Ferrero Rocher candies. And of course, Nutella. I know you mentioned that's your favorite snack. It's mine as well. It is buying the company for $23 a share. This is a $3.1 billion deal. Bloomberg, of course, reported this earlier before the deal was made public. And the move by Ferrero is intended to expand its presence in North America, and this could bode well for Kellogg at a time that the company has really been struggling. It had split into two, into Kellanova and WK Kellogg. Of course, Kellanova was acquired by Mars. Consolidation in the consumer space has been really pronounced, given some of these companies are really struggling with inflation and higher commodity costs. Tariffs, of course, have created yet another headwind for companies that are already operating on very slim margins.
And really quickly here, this is not as fun as chocolate, but NP Materials also having a big morning after signing a deal with the Defense Department. Yeah,
this is a rare earth minerals company based in Las Vegas, Nevada. It struck a multi-billion-dollar private and public deal with the U.S. Department of Defense. The deal is backed by $400 million in equity and a $1 billion loan commitment. That commitment is coming from J.P. Morgan and Goldman Sachs. And this is a big one right now because China has been a dominant producer of rare earth metals. It has used that as leverage in its trade standoff with the U.S. President Trump, of course, has taken measures to boost the sector, and some of those companies have done really well. MP Minerals up 60% this morning.
All right, Alexandra Semenova with the roundup there. The Open is up next. This is Bloomberg. All right, we are moments away from the official start of the cash trade on this Thursday morning. Welcome back to Bloomberg Open Interest. I'm Katie Greifeld. You're taking a look at really muted moves when it comes to this futures market. We know we started the week with 2 down days. We managed to rally pretty meaningfully yesterday, up 0.6% on your benchmark index. Right now, traders trying to decide what to do, waiting for a catalyst in this market. As we hang out near all-time highs on the S&P 500, you take a look at the NASDAQ, at the New York Stock Exchange, and the bells are ringing here as earnings season kicks off this morning with Delta optimism in the market. We'll see if that's actually reflected in the big benchmark. But let's go under the hood right now and talk about some of those airlines.
Yeah, speaking of kicking off earnings season here, bright start. Of course, the banks come next week, but Delta Airlines giving a guidance. It's up about 10% at the market open. They resumed profit guidance. Remember, there was some uncertainty there in the middle, and consumers are really traveling again, and it's sending major airliners higher. Of course, ones that also have a lot more focus to luxury and whatnot, Katie. It's not the same for every type of consumer. This will be an interesting season.
Yeah, that's true. That K-shaped recovery really showing up in Delta earnings. But let's go from the skies to underground, because mining stocks like Freeport really getting a boost after President Donald Trump said that the new 50% tariff on copper imports would take effect on August 1st. This was a really interesting trade to watch yesterday because Freeport shares actually fell pretty meaningfully at one point, but for right now up about 2% as trading really gets underway. But let's zoom out here and talk about this equity market, because stocks are poised to extend all-time highs in the next year and a half or so if the U.S. avoids a recession. Evercore ISI's Julian Emanuel notes that stocks gain an average 26% over the next 18 months after hitting all-time highs in non-recession bear markets. That said, it's pretty volatile. You could see drawdowns of as much as 15% in that period. And I'm pleased to say that Julian joins us now at the desk. Great to see you in person.
Great to be here.
So I believe the title of your note was something along the lines of, getting back towards the top of a roller coaster. Is that where we are right now?
Well, that's certainly where we've come from. And I mean, the emotions that we've all ridden in the last 6 months, very intense. But again, this statistic that as long as you avoid recession, and we continue to believe that you will avoid recession, is really the critical element in saying that the bull market can continue. And frankly, when you think about it, even though stocks are expensive, we are definitely, that is a concept on our radar. When you think about it, the two things that likely are going to propel the bull market forward are something that you've talked about in the last few minutes. Number one, the AI story has lots more runway in our view. This has always been the year where we expected adoption to accelerate, and it's doing so. And the shares are reflecting that. And then the other thing is deal making. It's really still early innings, but the fact that it's brewing is very consistent with the late stages of all bull markets.
You know that I love a good M&A story, but I also want to talk more about what Katie mentioned, that potential for a K-shaped recovery continuing on and maybe even exacerbating. You saw hints of it in Delta's earnings already. We had spoken to Tom Fitzgerald over at Cowen, and he said kind of lower cost budget carriers might feel more of a sting because of it. How might that theme play out through earnings season in terms of winners and losers in corporate America?
So earnings season is going to again be one of those where not all boats are going to float. But what's interesting, particularly about the airlines, is we all know back to the last earnings season, they were extremely cautious. They were realistic about coming to grips with the fact that the environment was not knowable given the circumstances. So they set expectations properly. And now what you see is you've got this recovery, and therefore the stocks are responding appropriately given the fact that there's more clarity. There will be certain parts and pockets where there will actually not be as much additional clarity, A, because the narrative wasn't talked down in the last earnings season, but B, let's face it, the tariff rate is going up, and so what we expect is that earnings estimates will probably start to decline again.
So two things there. I do think that the K-shaped recovery and that notion, it's going to be interesting to see if that becomes more of a discussion point as we get deeper into earnings. I mean, Delta is a great example. Premium did really well. It was sort of the economy class and below that really hasn't rebounded. So we'll see there. To your point on earnings estimates, the other notable thing about Delta earnings was that we actually got guidance. That wasn't the case in our past season. And you think about what companies are actually able to offer, what analysts and strategists are actually able to model out. It seems like we will at least have a little bit more clarity.
Yeah, no question about it. There, it's sort of like dipping the toes back in the water. We know there's still uncertainty. In fact, the Bloomberg Trade Policy Uncertainty Index, appropriately given the news of the last 10 days.
Thank you for citing it.
Well, it's very useful, has hooked back up. And frankly, that's one of the things that makes us a bit more cautious in the near term, is the correlation with the S&P 500 has almost been perfectly inverse since February. And obviously, again, you go back to the recovery off the April low, it's because policy pivoted. Policy's pivoting a little bit again in the other direction, but stocks are having an easier time of it, A, because corporates can offer more clarity on earnings season, and B, because there is the expectation again that we aren't going to have a recession.
You know, I also want to point out here a word that has been being used a lot in sell-side research, and that is valuation. You're seeing one by one different high-flying stocks being cut down in a lot of analyst research, but at the same time, CoreWeave being one of them just today alone. But you think about the way the retail trader has been behaving. They're bidding up these stocks meaningfully. NVIDIA hit that $4 trillion level. What do you think about valuations right now? And is it a playbook that new investors should be using, or has the playbook kind of gone out the window and trading is on momentum?
So the landscape has changed a lot in the last several years, and with the options background that we have to acknowledge that all else equal, one of the reasons valuations are incrementally higher than they would normally be is because a lot of the speculation is now occurring between 9:30 a.m. and 4 p.m. with 0 days to expiration options. The positions close out, the speculation is over, you go back to fight the next day. And so that actually is one of the things that lends itself to a higher valuation. That having been said, we are concerned here because if you go back and you look at history, we are firm believers in the concept of it isn't different this time. You are at about the most expensive levels, ex the tech bubble, that we've seen. That having been said, again, valuations alone don't end the rally. They may make it more bumpy. The roller coaster is probably going to get a little bit more gyration again, but they don't end the bull market.
An important point, valuation doesn't end the rally. Let's take a quick check on where we are in this market about 7 minutes into the session. It's pretty much an even split when you take a look at our move screen. We love to look at this around this time because the S&P 500, it's pretty much unchanged. Okay, it's a little bit lower, but still unchanged in the grand scheme of life and time. You can see, though, that what's doing well right now is Tesla, Nvidia, AMD, like we've been talking about. But then you take a look at the downside, Julian, you have Amazon, Microsoft, Alphabet. And if we take a look at the sector level, we go from the individual movers to the sectors themselves, you can see that push and pull playing out because, okay, consumer discretionary, industrials doing well. And then you take a look at tech overall, down about 0.1% right now. Julian, I know that you said that you're excited about AI here, that you said that this was going to be the year for AI adoption. Do you expect that to play out in the tech sector overall?
Look, tech is one of our core overweights. It's been for the last several years. As we said, we do think that adoption of AI is broadening. That will continue to be a positive. But again, one has to realize, given the valuations, given the seasonality, it's going to turn less favorable in August, and September we don't even talk about because everyone knows September is back to school and stocks don't like back to school. But investing in technology comes with more volatility. That's just something that an investor needs to be comfortable with, and we think that's part of the reason you stay invested.
So valuations don't end rallies, and you have to be comfortable with volatility. That's a pretty good place to leave it. Julian, it's great to see you. That is Julian Emanuel from Evercore ISI. And Sonali, take a look at the rally right now. Again, it's pretty boring when you take a look at just the surface level, but a little bit more movement under the hood and a lot of bifurcation in tech.
Yeah, a lot of rotation in the market, too. The market's struggling to hold on to its morning gains, flipping into the red, but pretty much flat on the day for the S&P and the NASDAQ, Katie.
Absolutely. We will continue to follow this market, of course, opening in the green and then flipping red. But we turn now to our Bloomberg Radio, where Tom Keene and Paul Sweeney are speaking now with NYC Mayor Eric Adams.
And we welcome, of course, Sonali Basak, Catherine Greifeld. Thank you so much. And Bloomberg Television, all across this nation and worldwide as well. It is Bloomberg surveillance on YouTube and our audio nationwide. Joining us now, he is the mayor of New York City. We have a 2-hour conversation to squeeze into a polite 20 minutes. And there are many, many topics to talk of. I want to talk of the immediate news. My father came home to College Point, Long Island. In the distance was LaGuardia. What a celebration for New York, the rebuilding of LaGuardia. Halfway there is Bayside High School, where you used to darken the door. And let's not mince words, it was a challenge, Mayor Adams, a few years ago. I want you to speak right now to the teachers of Bayside High School who went with the other guy yesterday in their union endorsement.
Well, when you look at what we were able to accomplish here in the city, we've outpaced the state in reading and math, got so much more to do. But also we're developing the fullness of our children, teaching them meditation, breathing exercises, healthier food to eat. So our children are not only academically smart, but we want them to be emotionally intelligent. And at the same time, what we have done in our educational system for 130,000 children in pre-K, 3K, the universal after-school program, and paid our teachers a darn good union contract to make sure that they're having the wage that they deserve.
My youngest child, Afterthought, went to a school with 11 languages in first grade. You have Ackman and Loeb, Wall Street support. They talk charter schools. Can you reaffirm here a better education system away from union dynamics and the silliness of it all?
So important. When you think about when a parent drops their child off to school, they're not asking if it's a charter school, if it's a parochial, if it's a barter school. They want a quality education in a safe environment, and that is what we've produced. And, union heads don't always speak on behalf of the rank and file teacher population. I know those teachers appreciate what I have done as the mayor and what this administration has done, and many of those teachers will be voting for me.
Mr. Mayor, what statement were the Democratic voters making when they selected Mr. Mamdani in the primary? Maybe here in New York City, certainly, but maybe even nationally.
Let's examine this, and I think there's something that has been not really understood. 9% of voters voted. 9%. 91%, they have yet to speak. 2.5 million Democrats, 1 million independents, several 100,000 Republicans. This is the moment when we're going to see what New Yorkers want. Do you want someone who defund and disband police departments? Do you want someone that's telling high-income earners to leave our city without understanding the economics that they bring? Do you want to stop our progress in one of the healthiest economies we've ever had and public safety? He wants to empty Rikers Island. 7,400 of the most dangerous people in our city. He wants to empty Rikers Island and have them come back to the communities that they offended. And so New Yorkers are going to be able to hear clear messages of what the future looks like and what that future looks like under him.
Current polling, slingshot strategies, have Mr. Mamdani at first at 35% of the vote, Governor Cuomo second at 25%, Mr. Sliwa 14%, and you at 11%. What does that poll tell you, and what do you need to do to change those numbers?
It tells me don't listen to polls. Okay. 2021, they had me 13% behind Andrew Yang, 13% behind Andrew Yang, and we're not calling him
But you
Mayor
were not
Yang.
behind Governor Cuomo. What do you need? Have you spoken to Governor Cuomo yet in this turmoil?
Communicated with him several times. Andrew has a history of doing things when it comes down to African-American candidates. He did it to Carl McCall when he ran for governor. He did it to David Patterson when he
who spoke recently.
Exactly.
Blistering.
He did it to Charlie King when Charlie King ran for AG. He did it to Keith Wright. He has a history, and I think the difference
supporting or
sabotaging the race and
okay.
trying to compel them to get out of the race. He underestimated Eric Adams, a former cop that knows what a bully looks like. And I am going to complete this race. My campaign has just started. I have not been campaigning. I have not had an opportunity to speak to voters.
You're going to complete this. Let's be clear, folks, particularly for our national audience. Eric Adams with us here at this interesting time for the city and, of course, for the nation is, well, thank you for joining Bloomberg Surveillance on television and radio. Mayor Adams, but the critical distinction here is the timeline to the election. When does the Adams-Cuomo tension need to get fixed to come to an efficacious outcome for the people against Mr. Mamdani?
Think about this for a moment. Andrew knew that Mamdani was going to be on the ballot on the Workers' Family Party line. He knew that. He knew I was going to be, as a Democrat, on my own line. He knew that. So why would he also do an independent line? He created this scenario because he thought by doing so, he can force someone out of the race.
Are you saying that Andrew Cuomo created Mr. Mamdani's campaign?
He created this scenario that created an opportunity to divide the vote instead of being unified around Mamdani. This was his creation, and it's typical of how he creates these scenarios. We're not going to succumb to that. He had his chance, $25 million he spent. He got his message out. He didn't campaign. He didn't go out and interact with voters. He created it. Now it's time for me to have an opportunity, and we will win and beat him.
Has Governor Cuomo asked you not to run, or have you asked Governor Cuomo not to run at this stage?
Both. When he spoke, we both interacted, and I said, you should step aside for the good of this city. We both agree the city will move in the wrong direction under the primary winner, and I think he should do the right thing.
If he doesn't do the right thing from your perspective, would you run as a Republican?
No, it's Curtis Lewa is the Republican primary winner. He's the winner of that party. It's too late to switch that right now. I'm going to get votes from all New Yorkers, because when New Yorkers want safe street, they're not asking if they're Democrat or Republican. They want their streets safe.
The constant theme, Mayor, of our interviews and surveillance has been committed to talking about this debate with its national ramifications. And you mentioned it earlier. The New York Police Department, as a general rule, I'm speaking as an amateur, we're 3,000 down on the body count of the New York Police Department. What are you going to do day one on a second-term mayor to get the NYPD back to a forward motion?
Well, that urgency can't happen on the re-election. It's happening now. We're in the place to bring on 4,000 more officers.
By when?
They're starting now. We have a class that's in now. By the end of the year, we're going to be substantially higher. And part of the problem is a lot of the large classes, we saw a attrition. We saw a lot of officers retiring. That is why it was imperative as the mayor that I settled a good contract with our union members.
Eric Adams with us here, the mayor of New York City. We welcome all of you nationwide. How you listen on your commute. Good morning, 99.1 FM in Washington, 92.9 FM in Boston, and of course, Bloomberg 1130 here in New York. On YouTube, our new digital platform, Mayor Adams watches every day. Subscribe to Bloomberg Podcast. Paul?
Mr. Mayor, let's talk about immigration. Right off the tip of Manhattan, we've got the Statue of Liberty. That means a lot to a lot of New Yorkers. How do you think about immigration in this city? And maybe how does that differ from what President Trump thinks about immigration in the city?
And you're right. That statue represents a lot. And particularly when you look at the fact that my 19-year-old uncle died to protect the right of being an American in Vietnam War. But think about this for a moment. Coming here, you should not be inflicting violence on undocumented New Yorkers or documented New Yorkers. We manage a humanitarian crisis with 237,000 migrants and asylum seekers. Not one slept on our streets. Every one of those children were educated in our school system. And I'm going to coordinate with federal authorities to go after those who are dangerous, like the Venezuelan gang members we took down that were selling drugs, forcing women into prostitution who were undocumented. The law does not allow us to collaborate for civil enforcement. We won't do that, but we will collaborate to go after dangerous people.
I should mention again, good morning on Bloomberg Television with Katie Greifeld and Sonali Basak as well. Mayor Adams, here's a headline. I talked to Lauren Emmaus, and this is just so important within her expertise of this city. The LA Times. Heavily armed immigration agents descend on LA's MacArthur Park. If I'm having a beverage at the Sunset Tower Hotel, I look across the opulence of LA to a really tough part of town. And the other day we saw military enforcement wrapped around these deportations and ICE marching across MacArthur Park in Los Angeles. If the critics to you will say you're in Trump's back pocket, how are you going to push against the president and his administration if we have those tensions in New York?
You know, one of the best saying is if you tell a lie long enough, you think it's true. But we need to deal with the facts here. We took this administration to court on things we thought were wrong more than any mayor in the country, more than any mayor in the country. But when I needed the president to lift the stop work order on a multi-billion-dollar wind farm project in Sunset Park, 1,500 union jobs, 500,000 homes would have benefited from it. I flew to Washington, had a healthy conversation with him. He lifted the stop work order. Same relationship I had with President Biden, 10 trips to Washington, 2 meetings with the president to deal with law enforcement officer. I nicknamed myself the Biden of Brooklyn. I work with presidents. I don't war with presidents. I have to deliver for the city of New York. And it would be irresponsible for any mayor not to do that.
But then to the granularity of this election and this, it's like Lindsay in the 1980s or something. I can't keep track. Is Adams an independent, a Democrat, a Republican? What is he? We don't know this one. He's an independent. I'm kidding. Mayor Adams, my team is listening to this interview, and there has to be a clarification of your relationship with the President of the United States. When will we see that?
I think you're seeing it now. You're seeing a mayor that's defending and fighting for his city in a responsible way. New York City is the largest city in America. And if you're going to be the mayor of that city and you are unwilling to communicate with the president of the United States, if it's Biden or Donald Trump, if it's a Democrat or Republican, that's irresponsible. Governor Hochul went to Washington several times. Mayors across the country are going to Washington. And so for anyone that states that the mayor of the largest city in the country should not be communicating with the White House, that's irresponsible. You're not delivering for your city. I must deliver for New York. That is my primary goal, and that's who I respond to.
Mr. Mayor, in terms of delivering for New York City cost of living has always been a key issue.
Yes.
What is the plan? Is there a solution here? Because every day people keep coming into this island of Manhattan. How do we house them all?
2021, when I ran for office, the top issue was public safety, and housing followed that. The reason you're seeing other conversations come on the floor in this election is because we solved the public safety problem. You see, with Commissioner Tisch, we have the lowest numbers of
I will
homicide.
state, let me interrupt. I will state where I live, folks. I can state it's not as bad as it was 18 months ago. I still don't like it. But Mayor Adams, I'm going to cut you some slack here. It's better than it was 18 months ago.
4.6 million people take our subway system every day. We have an average of 5 felonies a day out of 4.6 million. These police officers are doing an amazing job of keeping us safe. But the issue of affordability, I know it so well. I grew up in poverty. The primary winner grew up in luxury. Yet that same luxury he grew up in, he's stating that we should not have a financial ecosystem. I want the person that drives a limousine to have prosperity in the city and the person that sits in the back of the limousine. That's the city I want to live in.
The zeitgeist here, and again, Lauren is briefing me on this, is you came into office and there was this scandal, that scandal, that. I don't even, it's old news for me. It's water well under the bridge. But there's a zeitgeist now that you need to get a new team as the next mayor, maybe involving some of those people in limousines. You teamed up with Ackman, Loeb, and the others within the financial business. If the other guy's elected, Mamdani, where, John, are they moving to Coral Gables or to Miami? Which is it?
Both.
This is serious, Mayor, this is serious stuff. You've got a mandate for how many millions of people are under your watch?
8.5 million New Yorkers, 320,000 employees.
I want you to talk to the 100,000 fancy people in those limousines right now. How are you going to get them not to move to Florida?
Well, first of all, we're going to win this race. And in my reelection, we're going to continue what we have done. In New York, as we talk about this business channel here, we have more jobs in this city in the city's history, more small businesses in the city's history. Bond raters raised our bond as they saw us navigate out of COVID, migrants and asylum seekers, crimes. When you take 22,000 illegal guns off the streets, 100,000 illegal vehicles that were used in current criminal behavior, you have stabilized the city. The economic stimulus package of the city is public safety.
Right. Oh,
Mr. Mayor, given where the polls have you now, whether you believe the polls or not, what is your path to victory, do you believe?
New voters. 91% of the voters did not participate in this election. We have a substantial number. We're going to register 1 million new voters over the next few months. And everyone is talking about the excitement that is felt over the primary winner. What they're missing is the excitement that I am seeing every day of those who say this can't happen.
How do you run against Mr. Mamdani?
I'm sorry?
How would you run against him? How will you run against him?
You have to do it in layers. You have to look at the various communities. And when I say communities, I'm not talking about a geographical location. I'm talking about issues. I met with 250 bodega and supermarket owners yesterday. A government-run supermarket would devastate their business. I met with 250 of the 700,000 small property owners. Can you imagine telling a small property owner that you can never raise the rent so that your rent rolls no longer equal the repairs of the building? Those small property owners are going to lose their property. All of these different communities are now waking up and realizing what his policies would do to them individually.
I'm going to make this the final question and come full circle to where we were before. And thank you so much on Bloomberg Television Worldwide for being with us. The distinction of this campaign is the kid you were, and it was a train wreck. When did your life turn around? Well, how old were you when your childhood became you as a police officer? What was the age where the tipping point was?
About 19 years old.
The parents of that 19-year-old brat, whoever they are today, okay, they are voting for the tradition of Mario Cuomo. How do you get them to shift from Mario Cuomo's son over to Eric Adams? How do you get that conservative, black, public safety electorate to turn and vote for you?
Well, they voted for me in 2021. And remember this, as we reflect on this election, of my first job at 12 years old as a paper boy, then becoming a dishwasher, then working in the file room of Blue Cross Blue Shield, working in the file room of Pete Mitchell. That long legacy of blue-collar work is helping me understand the needs of the working class people in the city.
Mayor Adams, thank you so much for joining Bloomberg today. Greatly appreciated. He is Eric Adams of New York City. Red and green on the screen right now. Thank you, Bloomberg Television, for being with us as well. The Dow up 60 points. I'm going to call it a very stasis market here.
And that was New York City Mayor Eric Adams with Bloomberg's Tom Keene and Paul Sweeney. Welcome back to Bloomberg Open Interest. I'm Sonali Basak alongside Katie Greifeld. We are 30 minutes into the trading day, just about, and we are looking at actually a little bit of red on the screen. The S&P 500 began with gains, and now we're down about 1/10%. Katie, look at that NASDAQ 100.
Yeah, it's interesting to see a little bit of a dip when it comes to your big tech names. We know that we hit NVIDIA $4 trillion. Very exciting, a lot of bells and whistles there, but not enough to prop up the overall tech benchmark.
Yeah, and it's interesting. We'll talk more about the bond market as well. The 10-year yield seeing a little bit of a lift. But coming up next, as President Trump issues another fresh batch of tariff demands, we're going to speak to his former Commerce Secretary, Wilbur Ross. Thank you, Katie, for bringing that in.
And chip stocks, they keep on rallying after NVIDIA becomes the first U.S. company with a $4 trillion market cap. First U.S. company, but first company ever as well.
About $1 trillion more, I think, than the GDP of France. Just incredible. And Blackstone strikes a deal, signaling a private credit partnership with LNG with the goal of growing up to $20 billion in the next 5 years. We'll see how it all shakes out. We're going to bring you more of that. But for now, the Trump administration is counting on tariff revenue to make up for the tax cuts. We spoke with the White House Council of Economic Advisors Chairman Stephen Myron yesterday on how that math would work.
I expect the tariff revenue to be substantial. And in the research we put out about the deficit implications of the One Big Beautiful Bill and the rest of the administration's policies, tariff revenue played a substantial role in thinking about where the deficit would go in future years. We had about $3 trillion over a decade from it, which works out to obviously about $300 billion a year. And that's pretty close to where CBO ended up to when CBO got around to scoring it. So that's a number that I think is a reasonable baseline expectation. Given tariff rates are going a little bit higher now, the number might actually be a bit higher than that.
Now, our next guest says tariffs have been a policy distraction, but they are unlikely to generate substantial revenue. With rising inequality and fragile political consensus, the only choice continues to be to keep spending. Joining us now, Alberto Gallo, CIO and co-founder of Andromeda Capital Management. It's a perfect place to start with you. You look at the administration's policies, you look at the 10-year yield as a barometer, and you have seen the yield come down quite meaningfully, but it's been kind of sticky, hasn't it? Around 4.4%. What is it telling you?
Good morning, Sonali. So I think here the story is governments continue to spend, especially the US, but not only that, the UK, Europe, and they're trying to maintain a range in the 10-year yield, in the cost of funding, with a variety of stratagems. And one of them is issuing shorter-term paper, for example, in the US. Another one is having central banks that are more dovish or reducing the amount of quantitative tightening here in the UK with the Bank of England. So essentially, or alternatively, helping private commercial banks to buy treasuries, like with the SLR regulation. So essentially, we are in a form of controlled bond market. And the escape valve of all this is in the currency market with a weaker dollar. So the question is really, how long can Western governments continue to spend without either long-term yields rising or their currency depreciating and then creating a negative feedback loop? In the past, China was the anchor, buying government debt from the U.S. and supplying very cheap goods. And this anchor is no longer there. So this is the real breaking point, the real story. So far, financial markets are ignoring the risk. We're in a complacent environment, but the real risk is on the government side, not the private sector.
Well, let's talk about that in the context specifically of the 10-year Treasury yield. I want to pull up a one-year chart here because look at it. We're just chopping sideways. We really gravitate between 4.40, 4.5% on the 10-year Treasury yields, and it feels like we can't really sustainably break out in either direction. And I hear all of the different cross currents that you mentioned. And Alberto, when you take a look at that chart, what do you see priced into the long end of the Treasury curve right now?
Look, I think that inflation has quieted down. So tactically, 10-year yields are probably okay where they are, but it's not an asset that we like. And generally, we don't like to own government debt. If you think about investors around the world, and I was asked this question by a central banker, a few weeks ago, the central bank asked me and a group of other investors, why are investors so bullish on risk assets? And, there is very tight credit spreads, high gold, high equities. Why is everything going up? And I said, this is the wrong question. Investors are bearish on central banks. So what we're witnessing is a gradual de-anchoring of the inflation target. So central banks being more tolerant to an inflation level that is above target. Obviously, the last few prints have been positive, and the Fed will probably cut later this year. But I think that there are markets where this is fully priced. So we would not want to own duration here. We would not want to buy and hold credit. Credit is a very interesting asset class to be active in, but not to buy and hold right now. And probably in equities, we'll have more melt up because investors want an alternative to cash. There's $7 trillion in money market funds. And April has created a big scare. So people are underinvested.
To your point on the government debt aversion, you do see treasuries falling ahead of that 30-year auction. Longer dated debt has been a little scarier for investors, if you will. You mentioned the dollar a little bit earlier. I want to pull the one-year chart up of that as well, because it's not been sideways, it's been straight down since you've seen the heights. What is this telling you, and what are the ramifications?
Essentially, we are repricing from a unipolar financial system to a multipolar financial system, right? And so the U.S. is trying to gather their allies under its banner with tariffs and with closer cooperation. But the tariffs are not going to raise enough capital for the deficit to be sustained. So eventually the choice is for the U.S. Treasuries, to do some level of austerity and spending cuts. And we do see those coming in 2026. And the choice for the Fed will be between price stability and financial stability. And so far, what we see across central banks around the Western world is that they're choosing financial stability over price stability, so they're letting inflation run a little bit above target, which means, FX depreciation. And it means that investors need to own hard assets. So gold, private credit, private markets are okay, but they're very tight right now. And also investors should be wary of further rounds of volatility. We're in a very volatile world. So right now, it's much better to stay a little closer to home and position for upside in markets that have more room to run, like equities or commodities, for example.
That's really interesting, Alberto. And just to make sure I'm understanding you correctly, so you do see some sort of austerity, maybe in the form of spending cuts, coming to the U.S. in 2026. That's your timeline?
Eventually, that's going to be a need. And you can see that the voters' polls are already showing that voters don't like fiscal profligacy anymore as much as in the past. I think the UK is an advanced version of where the U.S. will be. Obviously, the UK has weaker dependence on commodities, dependence on imports. It's a weaker fundamental situation, but it has been doing austerity and is struggling to raise taxes, right? To raise tax revenue. So the U.S. is in a better situation and can continue to spend at a clip of 6-7%. But eventually, you have to find more ways of funding the Treasury, or you have to cut spending, or you have to push rates lower, real rates lower, and depreciate FX. So it's going to be a combination of all these three. And
Gallo,
we don't want to own government debt.
Yeah, but to the extent you're talking about with the idea of rates eventually getting lower in the United States, there has been that dynamic of also watching rates generally get higher in Japan. And I'm wondering, when you look at the capital flows around the world, what should investors be paying attention to? This is not obvious for a lot of people. One investor once described this to me as a sucking sound, slowly bleeding out of U.S. assets into higher yielding international ones. Is that something that is sustainable and perhaps not being priced in?
So when we think about reallocation, the U.S. has over $100 trillion in equity and bond market capitalization. And Europe or gold or other markets are much, much smaller. So even moving 1% of that pool of capital into a coffee cup sized market will create a much bigger price reaction than in that smaller market. So for example, European equities are just a fraction of the Mag 7, right? And gold market cap is around 20 trillion, not even. So in words, there's been a lot of discussions about the reallocation of assets and capital from the US to the rest of the world. But in practice, we see that flows are still very muted. In the credit market, we still have record long, for the last 15 years, record long allocation to US credit and record short allocations to European credit. So there's a lot of room for that reallocation to happen.
Alberto, we have less than a minute left, but I do want to stay on the credit markets for a little bit, because you're talking about public credit, you're also talking about private credit. And I wonder, when you compare those two asset classes, where do you see more opportunity right now? I was speaking to JP Morgan Asset Management CEO George Gatch a couple of weeks ago. He said that private credit actually looks a little frothy to his view, and he would rather stick to publicly traded junk. I wonder where you fall in that discussion.
There's only opportunity in liquid credit right now. The reason is that actively trading credit, especially when you start at the tights, can give you a lot of opportunity. Or in other words, the opportunity cost of locking your capital for 5 years is extreme when you start with very tight spreads. So you want to capture those dislocations. You want to be able to lend to companies when they need capital, not right now. Right now, capital is plenty available, and the Fed is cutting rates, and we're in a Goldilocks, blue sky pricing of risk. But things can change very quickly. So I would say that, in this situation, you want active credit, you want active management, and we can show that over the last 10 years, a very simple actively managed fund can outperform by 50% compared to the return of a buy and hold strategy. So this is a time where you want to be careful. You want to pay for a manager. Private credit is great for the managers that lock in those fees, but it's not great for investors.
Yeah, that is a really interesting note to leave it on. Hope to speak again soon. That is Alberto Gallo of Andromeda Capital Management. Let's go back to these equity markets. We're about 40 minutes into the trading day, and we're taking a look at Delta shares continuing to jump after the airline restored its full-year earnings guidance, now up over 13%.
Yeah, that brings you to a year-to-date decline of roughly 5%.
They're getting there.
They're getting there. They're climbing back up. It is their best day since the first week of April as well. We're also looking at ConAgra falling, the packaged good companies posting a disappointing profit outlook. They are really an acknowledgement here that tariffs are boosting costs.
Yeah, absolutely. And it's going to be hitting some of those companies that really make physical things and have to package them as well. But let's go back to the M&A landscape as well, because Kellogg absolutely flying after Ferrero announced a deal to acquire the cereal maker for about $3 billion. Shares up about 30% at the moment.
Yeah, my favorite thing about that deal, such a stunning gain for Kellogg. Consumer M&A has been running pretty hot. There's probably a lot more where that came from. It's a company that has looked at spinning off assets and now selling a more streamlined version of itself. An international company looking for a North American footprint, getting bigger. You'll see more of that. Also funny, enterprise value and equity value. They're not the same thing. I think a lot of people were thinking an equity value of $3 billion, not enterprise value for
Yeah,
this
we're
deal.
learning a lot. I will say the thing that I learned was that Ferrero was big enough to buy Kellogg. I thought
it was just Rocher's. I didn't realize it was Nutella too.
Apparently wasn't paying enough attention to Italian companies, but still ahead we're going to head to Sun Valley as the biggest names in tech and media are in town for the Allen & Co. conference. We'll take you to Idaho next. This is Open Interest.
And now to high interest, a look at what's making headlines around the world. CoreWeave is getting another downgrade today on Wall Street. Needham is cutting its rating on the company in the wake of its deal to buy Core Scientific for roughly $9 billion. It's the third downgrade since the deal was announced, but remember, it's trading at almost 3 times its IPO price, so serious run up, but a decline today. And Elon Musk's artificial intelligence startup xAI is rolling out its new Grok 4 AI chatbot. This is just 4 months after releasing its previous iteration, highlighting the frenetic pace of AI development. Musk also said the chatbot will be coming to Tesla vehicles soon. And tech titans and media moguls gathering at the Allen & Co. conference in Sun Valley with AI conversations being front and center. Steve Pagluka of Bain Capital spoke with our own Ed Ludlow about the AI revolution and why it reminds him of the early days of the internet.
And all the costs are going down for the chips, for the model loading, and as opposed to the internet, which there were some very few big winners. I think there will be a lot of winners here because there's going to be vertical models and foundational models, and the vertical models will be chock full of expertise.
That was Bain's Pagluka speaking to Bloomberg Tech co-host Ed Ludlow. Ed joins us now from Sun Valley. Miss you, friend. Miss being out there with you. You know, it's interesting. The one thing I would know is probably happening under the surface. You have Linda Yaccarino leaving X. You have, of course, Elon Musk trying to put out this new chatbot. You also have Sam Altman there at Sun Valley with you. What's the word?
Yeah, I mean, the word on Elon Musk, which I think is what you're getting to, is kind of like, well, he's not here. The news cycle happens. What's more interesting, I mean, Sam Altman did come and speak to us, right? And he was asked, you know, what do you make of Musk's beef with the president? And Sam Altman basically said, well, doesn't Elon have beef with everyone? And sort of stopped short of saying any more. What is more being discussed here, you know, according to people familiar with the matter, is the America Party and Musk's continued or ongoing political ambitions. The Grok 4 event last night was really important, and you guys did a good job giving the details there, but it was delayed, right? In true Elon Musk fashion, it was an hour late, so it happened pretty late overnight, and I'm yet to hear what the response is to the performance of that model. But yeah, you know, missing, but discussed in his absence here.
So Musk, of course, one of the hot topics there at Sun Valley. What about Mark Zuckerberg? I know that we've been talking about the relationship between Sam Altman, Mark Zuckerberg, whether or not we were going to get a meeting. Have we gotten eyes on Zuckerberg?
Yeah, no one has seen Mark Zuckerberg. At least those that I've spoken to haven't seen Mark Zuckerberg. We haven't seen Mark Zuckerberg. You'll remember that Sam Altman said that he expected to see him in the course of the week and that he looked forward to it. And that was in the context of questions around the AI poaching scenario. Remember the reporting overnight from Mark Gurman and Riley Griffin that the Apple engineer that ended up going to the Meta Superintelligence team has a pay package of $200 million over several years. And remember that Tim Cook is here. So, you know, I think that there are several conversations that need to take place. But, you know, what's kind of interesting is people are talking about this AI talent war, for want of a better expression. But remember that, like, in the early 2000s, things were, like, a lot messier. You know, you had many Silicon Valley CEOs kind of calling each other out, emailing each other saying, stop trying to take my people. Present day, it's very different. This is a marketplace, and it's the cost of doing business right now because of the commoditized nature or premium on top-tier, frontier model talent.
Ed, we thank you so very much. I'm very much looking forward to more of your breaking news, of course, breaking that SpaceX valuation a little earlier this week. And of course, Sun Valley is a place where deals are discussed. That is tech co-host Ed Ludlow. Now, coming up next, we're going to talk about the private markets. Blackstone strikes a $20 billion private credit deal with Legal & General. Details next in the Wall Street Beat. This is Bloomberg Open Interest. It's time now for the Wall Street Beat. Today we're focusing on a deal in the private credit space. Blackstone and Legal & General agreed to a $20 billion tie-up. For more details, we're going to bring in Silas Brown. He is Bloomberg's senior reporter for private credit. And this is actually, Silas, where I began my career reporting. This insurance focus for private credit firms, but it's not really insurance. These are savings products. These are annuities. These are ways for people to put private credit into retirement products, aren't they? Blackstone has said that they're going to stay capital light. They're not going to do what Apollo did and buy Athene, but they're striking deals left and right, are they not?
Yeah, and you were obviously ahead of the curve, being such an early reporter in the industry, because I think more and more I think this deal is sort of symptomatic of the tectonic shift occurring in private credit, with more of these private capital firms focusing on, private investment grade, asset-based finance, these kind of structured products that can cater to the insurance market. And I think this is a very big example of the latest trend in private credit.
And it's interesting, you look at the details here. So this tie-up will see Blackstone originate investment-grade private credit deals. And it feels like overall, Silas, we're starting to see a little bit of a shift specifically to these blue-chip sort of deals. What do you make of that?
Yeah, I know. I mean, I think when I started covering private credit, even 3 years ago, the place to be was direct lending, private equity, buyout financing, that kind of area. And you just feel a shift in focus among the leading private capital firms like Apollo and Blackstone and KKR towards this opportunity that is, 10, 20, 30 trillion, depending on who you ask, opportunity in private investment grade. And I think among insurers, there's a recognition that you can get basically good returns for a similar credit quality, similar rating, so similar capital charges in this sort of new frontier. And so that seems to be where a lot of the action is.
It's interesting. I do want to read Bloomberg Intelligence's analysis of this deal. Fascinating by the numbers. At the deal capacity and assuming 2% combined fees, implied revenue could be $400 million for Blackstone, or a 6% upside to 2024 fees. Now, when you look at Blackstone and others going towards the insurance industry, is this a sign that this is a business that is growing in the world of insurance, or is it a recognition, Silas, that those other businesses that you talked about, direct lending, for example, or even on the client side, institutional investors getting into private credit, they're just too crowded?
I mean, I think it can sort of be both. I think, listen, as you know probably more than me, the leading private capital firms are very scale hungry. They want to keep on growing, and they've obviously located insurance as well as retail to a certain extent as fertile ground for growing their institutions. I do think in terms of the total addressable market in private investment grade, I mean it's a Goliath versus the opportunity set that is presented in private equity, and so I think it is a way of growing their business and also financing the real economy and extricating themselves from the link, the straight link in their performance to the private equity firms, their counterparties.
Silas Brown, we thank you so very much for your reporting. We're going to get a look now, shift from private markets to public back again. We are looking at a market that has been wavering throughout the morning. And if you take a look here, part of the drag that you're seeing in the market is in those big tech names. The biggest points movers on the downside, Microsoft, Meta, Amazon, Broadcom as well. NVIDIA also now taking a breather after briefly hitting that $4 trillion valuation mark. Tesla, though, to the upside among the biggest, or is the biggest points gainer at this point in time. AMD, JP Morgan getting a breather as well on the upside after a choppy trade throughout the week. Now, let's flip up the board here, take a look at the sectors for a moment. There has been a lot of rotation in this throughout the course of the morning. Healthcare, materials, energy, though, leading the way for now, Katie. Communication services, infotech, biggest decliners by sectors.
Yeah, and one of the weights on this market is trade policy. We'll talk about that next with former Commerce Secretary Wilbur Ross. That's next. This is Bloomberg.
I watched a little bit of the cabinet meeting this week. And I saw Secretary Bessent speaking very glowingly about the projection is $300 billion in tariff revenue this year. Well, tariffs are a tax. And American importers and businesses and ultimately consumers pay almost all of that.
And that was former Vice President Mike Pence speaking to Bloomberg Television earlier this morning. And joining us now, I'm pleased to say, is another member of President Trump's former cabinet, Wilbur Ross, former Commerce Secretary and the author of the book Risk and Returns, Creating Success in Business and Life, joins us now. Secretary, fantastic to have you with us. I want to start with the tariff deadline, because you were on the record that July 9th, the original tariff deadline, was going to be very difficult to achieve. We did see that push back to August 1st. And I'm curious, from where you're sitting, do you think that August 1st is achievable, or might we see another delay here?
Well, I think almost every major country has already submitted a counter-proposal to the Trump administration, trying to ward off the tariffs that otherwise will go into effect. So the real question is, will Trump accept what they have on the table? Will they put a little more on the table? Where will it come out? But worst comes to worst, he is fully prepared to go through with the tariffs and have that be the end of the story.
You know, Secretary Ross, you also recently told Fortune magazine that, quote, "My one fear is that if our government feels too chesty with their progress, they may overplay the hand and get to levels that are hard, maybe even impossible, for other countries to give in. It's easy to get carried away with early successes." Now, you've pointed to the success that the early administration has had in these discussions in these early phases, but what if they go too far? Do they risk doing damage to relationships as well as parts of the U.S. economy?
Well, first of all, there's already been $100 billion collected in tariffs, and it has not really adversely affected the economy. The estimates are that that total will get to around $300 billion by the end of the year. $300 billion on a full year basis is a little over 1% of our economy. But what will really happen, American consumers won't pay the whole 300. The importers will absorb some of it. The exporters will absorb some of it. Probably some of the foreign governments will also absorb part of it. So it's only a fraction of that that I think will come to pass. And so what are you talking, a fraction of 1%? Well, you can't really even estimate the economy to within a fraction of 1%.
Interesting, but we know that it's some people's entire jobs to try to do exactly that. Let's talk about something that's even harder to measure, and that is confidence, investor confidence. I know that you made the point to Bloomberg News that sort of this tit for tat, the will he, won't he, when it comes to these tariff rates, that could erode investor confidence. And it was interesting to read into the Delta earnings this morning, because we heard from CEO Ed Bastian that people are starting to understand with clarity where things are headed. That allows them to start making plans whether to travel or invest in a business. And when you take a look at the current landscape right now, heading towards potentially another deadline that could be pushed back for tariffs, do you think that investors have just gotten used to the uncertainty, or do you think we could be nearing a point where some of that calm starts to crack?
Well, I think a couple of things. First of all, the most recent unemployment report was very favorable. It was only 227,000 in that week. So there's no sign that employers have started to be more cautious about hiring people than they were. Second, I think the key will be knowing what the end game is. And assuming it gets resolved on the 1st of August or thereabouts, that will clear the air, because businesses and markets can adjust to good news, they can adjust to bad news, What they have trouble adjusting to is uncertainty. And so one way or another, I believe things will be clarified around the 1st of August.
Why do you have confidence in that August 1st deadline, especially when we see some areas in which the Trump administration has been escalating the tariff wars here? You look at Brazil, for example, and the escalation there is quite severe. So why would August be a thick and final?
Well, first of all, the Brazil is a one-off. It's a very unusual talk about tariff because it doesn't have to do with imports and exports. It has to do with President Trump's anger at the way the Brazilian government is treating the former leader, Bolsonaro, who's very friendly with the president. So that's a one-off. I don't think it tells you much about anything else that he's doing.
Well, let's talk about that, Secretary, because you described that as a one-off, the situation with Brazil. But there is some worry there that we're really pushing into other realms, that we're not using these tariff measures just for trade anymore, and that this could set a precedent.
Well, President already sets the precedent. Remember back in the early days of this administration when he went after Mexico because they weren't helping him with the border and with controlling fentanyl. So he's used it with Europe in terms of the contribution of the various EU member states to defense budgets, as they're supposed to do with NATO. So the difference between the last administration of Trump and this one is he is using tariffs much more broadly. He's using the tariffs for achieving what you might call diplomatic or other roles having not much to do with tariffs. So the Bolsonaro thing, the fentanyl, there are a number of things like that that he's been using tariffs for. And I think the reason he's able to do that, or feels he is we learned in the first administration just how extensively the president can use tariffs without going back to Congress. Historically, the Senate has played a very major role in tariffs. This president has not taken anything by the way of tariffs to the Congress. And he's got some more things that'll be coming down the road. He has Secretary Lutnick doing 232 investigations on pharmaceuticals, semiconductors, and probably other things. And 232 is what we used originally to put on the steel and aluminum tariffs.
Well, Secretary, what do you make of that push, as you describe it, using tariffs for really expansive purposes outside of trade? We heard from former Vice President Mike Pence this morning. It seems like he disagrees with that push, and I just wonder what your opinion is.
Well, yes, I think Vice President Pence has tended to disagree with a number of the tariff decisions that President Trump has made. So that doesn't surprise me too much at all. But he is the president. He is making the decisions that he decides to make. And while some of them probably eventually will be challenged in court, for the most part, the courts have been pretty good in coming in on his side. And as I said, that's what gives him the confidence to be a bit more expansive.
Secretary, you're also on the side, very interestingly, about to join the board of a company focused on crypto. This company, Reserve One, is merging with a SPAC, going public. We spoke to the CEO of Reserve One a little bit earlier this week, and she actually mentioned your involvement, had mentioned that perhaps in the past you might not have been keen on crypto, but now are obviously taking a much bigger stance by joining this company, which is focused on Bitcoin treasury. Why did you change your mind? Are you a believer now in crypto more broadly, or is there something about Bitcoin that you are now latching onto as the administration warms up to crypto?
Right. Well, what has changed? My objection to crypto in the beginning had been that it was a little bit like the Wild West. You didn't really have government regulation. You didn't have government supervision. You didn't have professional investors really active in it. But look at now. Here you have President Trump getting all sorts of regulatory things through, and in fact, getting into the crypto business themselves. You've got BlackRock, Fidelity Funds, and others coming in. You have Strategy and others using corporate treasury and arbitraging capital markets into Bitcoin. So what's happening is you're getting away from the retail Wild West and into a more professional environment. And I think that's what we're trying to accomplish with Reserve One, is bring a batch of professional skills, both broadly investing and specifically knowledge of Bitcoin and the other competitors. So the world is changing. It's becoming widely accepted as an appropriate institutional class, and therefore the environment has changed. And I think that's the important thing. For example, the trading of late has been mostly what they call whales on the sell side. Those are retail individuals who had accumulated 1,000 or more coins in the old days and therefore have now made a big fortune out of it. Those are tending to sell, and who's buying are the ETFs, people like Strategy, and all sorts of institutional investors. Larry Fink is widely quoted as saying he recommends that 5% of portfolios should be in Bitcoin. Santander, big Spanish bank, they're recommending to their clients 7%. So what's happening is you're getting away from the wild and woolly, unregulated, mostly retail market into one that's very much more professionalized. And I think that's a healthier thing.
Right.
And
Unfortunately, Secretary, we're up against the clock. Really looking forward to seeing your progress with Reserve One. And you're right in that this has become a much more mature cryptocurrency market. Really appreciate your time this morning. That is Wilbur Ross. He is the former U.S. Secretary of Commerce. Now let's get back to these equity markets and take a look at some single stocks moving this hour. We start with Freeport-McMoRan. Shares higher after President Trump confirmed a 50% tariff on copper imports starting August 1st. Also keeping an eye on shares of NVIDIA.
Yeah, really interesting here, taking a breather, about a 0.3% here. Remember, they hit the $4 trillion milestone this week. Moments ago, President Trump touting NVIDIA's stock rise, saying that the chip maker is up since his tariffs. We're also watching Tesla having a good day, Katie.
Yeah, the company will hold its annual shareholder meeting on November 6th. That crossing the wire this morning. Tesla shares up 3%. And Mobileye, Intel's sale of Mobileye stock attracted demand for well in excess of the available shares. That is according to people familiar with the matter. Mobileye shares down, though, about 3.7%.
Choppy market, and we're going to talk more about that market next. Coming up, Ulrike Hoffmann-Burchardi of UBS Global Wealth on why she thinks that the bull market still has room to run. This is Bloomberg Open Interest. Pragmatism will ultimately prevail over confrontation. That's been the message about tariffs from Ulrike Hoffmann-Burchardi, UBS's Global Wealth CIO of Americas and Global Head of Equities. In May, she wrote that assuming trade tensions continue to ease, we see room for the equity market rally to resume into 2026, with the S&P 500 reaching around 6,400 by June next year. Ulrike joins us now. And you look at the rally that we've seen, and it has wavered of late. But more and more, we're hearing more bullish sentiment from the analyst community, from the sell-side community, believing that perhaps the worst of the trade tensions are over. What else is going to really drive this rally?
That's a great question. There's this adage that the market is climbing a wall of worries. And I always found this a little counterintuitive because the greater the worries, the lower the wall. And I think that's what we have seen so far this year, and that's what we have seen also more recently. If you look at the way that we look at the equity markets, which is three lenses, the macro, the bottom up, and the transformational innovation, expectations on all three fronts have come down. So first of all, real GDP growth down to 1.2, 1.5% from 2.4% early in the year. Earnings expectations for Q2 down to 5% from 9% early in the year. And then on AI, I think there's been a lot of skepticism on the CapEx built out. And DeepSeek certainly has put this worry in investor mind that this CapEx built out may be over very soon. But yet we have seen on all fronts the data actually coming in quite strong.
I was going to say, specifically on your last point, is that narrative starting to turn? Because we've been talking about NVIDIA, $4 trillion. We're really psyched about it. But then you also saw TSMC really surprised when it comes to profit as well.
Yeah, I think if you take a step back, we recently actually wrote a note about what is the compute demand longer term from generative AI. We use Gen AI a lot in Q&A, and enterprise Q&A is another big use case. But what's also installed is agentic AI, where inference is going to become a real mode. And it's not just one-shot inference, it's multi-stage inferencing. And that needs a lot more compute. And we actually think that by 2030, we may need about 5 times the compute compared to the current install base. So, you know, there may be glitches here and there, but the trend for us on the compute side is certainly up. And that's why we're not, too concerned about, potential pullback, even if it's from one quarter to another, should that come on CapEx, because ultimately the compute intensity of this technology is so high.
I also just want to prove the point you've been making here about the numbers being good, but the sentiment being kind of wavery. TSMC, we came in this morning, them and NVIDIA were trading higher. That has reversed already, an hour and a half into the trading day. I want to go back to the point that you were making before about slower growth, because the Trump administration is assuming that we can get back to 2.8 to 3% growth. Do you buy that we can get there? And if we don't, what does that mean for valuations?
Yeah, we think, again, from the three lenses, these structural transformational trends, AI, electrification, and also longevity, those will all still contribute to a lot of investment spend over the next years. AI obviously is also a big productivity enhancer. So I think these are tailwinds for GDP growth in the US. But one important factor is tariffs, and we can't see tariffs going too high. We think ultimately they'll settle at about 15% effective rates, where we think this could be economically digestible for the US. If you think about the average FX volatility, that's probably around 10 to 15%. So we think that's manageable. It shouldn't go much higher because we have seen historically that's tempered growth. And I think that's a constraint that the Trump administration actually has as part of the whole tariff negotiations.
That mid-teens number seems to be kind of Wall Street consensus here,
Right.
that the market can stomach that level.
Yeah, absolutely. And I want to talk about how, if we do get that, how that filters in through the economy. Because, again, I go back to Delta earnings and this concept of a K-shaped recovery. You can see it if you view the Delta earnings through that way. They're doing really well on international, on premium, not so well when it comes to economy and the back of the plane. And I think that you could use that as an example for the economy, where we could see, the higher income brackets continue to be fine, whereas maybe it's some of the lower income tiers struggle a little bit. I wonder how you see that evolving and taking shape.
Yeah, I think a lot of it depends just on tariffs and how quickly we're going to get resolution on tariffs, because that's, I think, consumers and also companies are starting to spend more. We have seen consumer spending hold up pretty well, retail sales hold up pretty well, but I think that uncertainty, if you look at sentiment numbers, still weighs on the market and also on the consumer and businesses. But they still don't know exactly where to invest that next dollar. So a catalyst, to your point about K-shape, could be that resolution of uncertainty, hopefully over the next few weeks, if not months.
Ulrike Hoffmann-Burchardi of UBS Global Wealth. I'm really interested in seeing how that K-shape plays out, Katie, also in bank earnings next week and across the financials, which kick off earnings season for us. Stick with us. Got more markets for you ahead. Choppy trade. This is Bloomberg Open Interest.
Welcome back to Open Interest. We're taking a look at a market that's trying to decide what to do on the benchmark level. The S&P 500 pretty much unchanged, 0.1% higher. I can't get too excited about that. A little bit more direction when it comes to the NASDAQ 100. And there's a real push and pull going on when it comes to tech right now. If you take a look at the S&P 500, your biggest gainers on a points basis, Tesla and Apple, you would say, okay, probably the market is higher. No, because on the downside, Microsoft, Broadcom, Meta, all pulling to the downside.
Yeah, we came in this morning with a lot of optimism. TSMC, strong numbers, signaled more optimism among its clients like NVIDIA as well. Ended up going negative. It's now almost 1% lower on the day. NVIDIA also not feeling the same love as earlier.
Yeah, and that's going to take a bite out of the benchmark as well. But we have a great show tomorrow.
We sure do. We have Ann Berry of Threadneedle Ventures joining us, Cameron Dawson of New Edge Wealth, Bess Friedman of Brown Harris Stevens. The ladies are taking over Open Interest. Join us. This is Bloomberg Open Interest.